This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Libya's National Oil Corp warned on Monday of a painful wave of closures, and declared force majeure on some output and exports as forces in the east expanded their blockade of the sector over a political standoff. The company said it could no longer implement contractual obligations for oil deliveries from Zuitina terminal or from its biggest oil field, Sharara, after saying on Sunday it had halted production at another field, El Fiel. With global energy markets already restricted due to the Ukraine crisis, more losses from Libya's recent 1.2 million barrels per day average output will put further pressure on prices.
Russian oil production has continued to slide in April, declining by 7.5% in the first half of the month from March, the Interfax news agency reported on Friday, citing a source familiar with the data. Oil output has been under pressure amid sanctions from the West over Moscow's activities in Ukraine. Interfax said Russian oil and gas condensate output stood at 1.392 million tons per day on average in the first 2 weeks of April, down 7.45% from March. In barrels, output declined to 10.2 million per day, BPD, from 11.01 million in March.
Moving on to the top news in the energy sector.
Indonesia on Monday raised its royalty rate for coal miners from a single tariff of 13.5% to a range of 14% to 28% dependent on government-set coal benchmark prices, a change miners said could impact future investment. The maximum royalty applies to general sales when prices breach $100 per ton, Lana Saria, a director at the Energy and Mineral Resources Ministry said on Monday. Coal sold under the so-called Domestic Market Obligation, DMO, to power plants and some other industries will be charged the 14% royalty, as those prices are capped at $70 and $90 per ton. The new scheme was set as coal miners convert their licenses into a new Special Mining Permits (IUPK) system when their contracts expire.
3 firms involved in Britain's oil sector, including ExxonMobil, have secured injunctions to stop protests by climate change activists which have caused widespread disruption this month, the government said on Friday. Environmental groups such as Extinction Rebellion and Just Stop Oil have been staging daily protests in London and across the country which have mainly been focused on oil facilities. Navigator Thames, ExxonMobil and Valero have now secured civil injunctions to allow them to minimize disruption and prevent further problems, Britain's business department said. Next, we have the top news in metal markets. Shanghai copper and nickel prices extended gains to a 4th session on Monday, as low inventories and hopes for additional stimulus in top metals consumer China outweighed pressure from a stronger dollar. The most active May copper contract on the Shanghai Futures Exchange ended daytime trading up 0.3% at 74,760 yuan, $11,738.84, a ton, after rising to its highest since March 8 at 75,320 yuan, $11,826.78, in early Asian trade. Shish Fe nickel climbed 1.8% to 225,280 yuan, $35,373.55, after rising to its highest since March 28 earlier in the day. The London Metal Exchange was closed for Easter holiday.
China's aluminium production in March rose 1.8% from a year earlier, official data showed on Monday, increasing to the highest since last May, underpinned by a recovery in production and strong profits. Primary aluminium output in the world's top producer of the metal stood at 3.3 million tons last month, up from 3.276 million tons of production in March 2021, the National Bureau of Statistics (NBS) said. On a daily basis, March aluminium production was 106,452 tons, slightly down from the daily average of 107,288 tons during January to February, according to Reuters calculations based on the NBS data.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures rose on Monday, tracking other edible oils on China's Dalian exchange, supported by lingering concerns over tightening global supplies due to the Russia-Ukraine conflict. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange gained 2.23% to 6,461 ringgit, $1,519.16, a ton by closing. The contract posted 9% weekly gain last week. The market is led by the performance on the Dalian exchange, though low exports and better production can weigh down any rally, a Kuala Lumpur-based palm oil trader said. Still, the prolonged war is supporting the market.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.